Good morning, Steve Reed in Chicago with the morning grain comments. Markets are lower overnight. Beans down about 7 cents, while corn's down 4, and wheat in Chicago, KC, and Minneapolis down about 10 cents. November beans are now at 10-week lows. The December corn now is the lowest price in 5 months. And I think most of the blame on that is the continued shutdown of U.S. exports out of the Gulf. Still not a lot of new news yet on when electricity will be restored. Then it's going to take time to evaluate damage and repairs. And that slowdown is backing prices, as far as basis is concerned, back into the country. As far as weather is concerned, U.S. 2-week forecast is warm and dry, which should speed up harvest, which could add to some of the difficulties in having the Gulf as an outlet for some of that grain. It also suggests that the southern plains will be drier than normal, and that around the world, central and northern Brazil looks to be dry. Central East Argentina continues to see rain, but the rest of the areas are drying out. And the Black Sea, Russia, is also drier than normal. And the second week of the map shows a little bit of rain for Ukraine and southern Russia, but not for the rest of the area. There's concern, like the U.S., about the weather for them to plant their winter crops. As far as outside markets, still watching the COVID spread and the impact it may have on U.S. and world economy. We're also watching inflation numbers to see, if the Fed tapers or if they start raising rates because of inflation. We have the USDA report tomorrow and export sales, and we'll see what the export sales have done, with word that China may have bought a few cargoes of U.S. PNW beans overnight. Still not seeing a lot of corn demand, especially from China, and there was word that China might sell some of the soybean oil out of the reserves. We also get the USDA report, and yesterday we had a surprise that the FSA crop program enrollment acres came out, and they were higher than August. So people kind of took that as maybe an indication that the USDA might raise acres in this September report. Some of the analysts that follow it real closely doubt that they'll change the acres that much, so that's a big unknown for tomorrow's report. Also, the trade's looking for higher carryouts, both in 2021 and 21-22 of beans and corn, and so we'll see if that offers any resistance to the marketplace at these lower prices. Funds continue to liquidate their long positions, and that also is because of probably some negative technical patterns. As far as any other news, Matif, the rapeseed contract made new highs, and Argentina FOB corn also made new highs, restricting any new export demand from them. And gas came in and paid wheat yesterday at 6-year highs for imports. Stats Canada numbers were a little bit negative as far as stocks are concerned, but still the rape and Canada wheat crop are expected to be well below last year's levels, reducing some of their exports. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.